Hello and welcome to Business Incorporated. I am Bisi Adebayo. Coming up on today's program, Morocco's CPI slows to 0.9% year-on-year in April, Rwanda to increase spending by 7.5% in 2020-2021 fiscal year, and Egypt to take 1% from workers' salaries due to coronavirus. But first, let's begin with the markets. And most major markets in Africa were in the negative territory at intraday. And just like yesterday, only the NSE was up 0.18%. In South Africa, the GSE lost 0.76%. Egypt's EGX30 shaved off 1.09%, while Kenya closed negative on Wednesday. And elsewhere in the Gulf region, major markets were mostly positive at intraday, except the Abu Dhabi index, which was lower by 0.43%, while the market in Dubai gained the most by 0.28%. The Qatari index was next in the trail of gains as the market rose 0.19%, while Saudi's index was up marginally by 0.01%. In the UK, factories see more gloom ahead of a record slump in PMI, and output falls over the last quarter at the fastest rate since 1975. Well, let's cross over to our London studio where my colleague Juliana Olayinka is standing by to tell us more. Good afternoon, Juliana. Well, you spoke earlier with Chimi on the UK's May PMI, which shows that the economy is still shrinking. How is that keeping up sentiments at the market at intraday?
Good afternoon, Bisi. Well, the FTSE red, and it's still in the red at intraday. We did get the flash PMI composite numbers. This PMI basically has a look at how Britain is doing in manufacturing, construction, and services. It was a little bit higher. It was 29.8 in May, and it was about 13.6 in April, which is a deep recession, and it has ticked up a little bit. That did push the FTSE up by a couple of points, but it's still pretty bad. And economists do say that these figures do suggest that in Q2, Britain could be heading to a 15% drop in GDP, which would mean that we are falling sharply. We have had echoes from the Bank of England that they are going to increase how much bonds they buy from the government. And of course, earlier in the week, the Chancellor Rishi Sunak did also say that it's not likely to be a V-shaped recovery. Even with all of the government measures that have been put into place, it could take many years. In fact, some would say until 2022 for Britain's GDP to look like how it did pre-COVID. So how is that shaping up the numbers? Well, at intraday, the FTSE All-Share is down by 0.60%. The FTSE 100 is down by 0.78%. And the FTSE 250, the domestic market, is slightly up by 0.09%. In currencies, the pound is down on the dollar by 0.07%, down on the euro by 0.17%, but slightly up on the Japanese yen by 0.14%.
In company news, Juliana, hotel group Whitbread has launched a £1 billion right issue. What do they hope to use the money for, and how has that impacted the group's shares?
Well, they're hoping to raise money because they said that they want to buy what they consider to be lucrative land in certain places in Germany and Britain, if indeed those two big economies do enter into a recession. They've been speaking this morning and pretty much been doing a major round of interviews with the press, and their chief executives are asking their shareholders not to be worried. Whitbread, they're a pretty popular chain. They own Premier Inn Hotels, which is pretty popular hotel here in the UK. They've got about 824 hotels. At the moment, of course, they're all closed, and about 27,000 of their staff are on the government's furlough scheme, so the government are paying their employees' wages at the moment. But as soon as they announced that they're trying to raise £1 billion, their shares were actually the biggest faller on the FTSE 100. Their shares fell about 12.5%. They did say there is no cause for alarm, that even if the lockdown continues for the next couple of months, they've got enough cash in their coffers to keep going. But they said anytime they've had a major expansion, they've done it during a time of a recession, and they say this is a time of recession. But some shareholders feel that, of course, this is a recession that the world has probably never seen before, and the thought of trying to invest in a hotel at a time where we're not sure if people are willing to travel from home is a little bit risky, which is why as soon as they announced this £1 billion search for cash, their shares dropped so steeply.
What about EasyJet now? The airline says it will resume some domestic flights in June, and that's despite reporting a highly sophisticated cyber attack. What safety measures are they putting in place before resumption of flights?
Well, it's going to be tough, but 15th of June is just a couple of weeks away, about 3 weeks away. So if you're a keen traveller and you're desperate to get out, EasyJet could potentially be the option. The budget airline did announce that they will be making just a few domestic flights, so some domestic flights within France, some domestic flights within the United Kingdom. So some people that want to get from London to some of the regions up in the north of the country, you will be able to do so. They also said that they will be running one flight a day from Gatwick, Britain's second largest airport, to Nice in the south of France. So they're going to be doing this. They said that they are going to be making sure that it will be completely safe for air and cabin crew and passengers. You will have to wear a mask. There will no longer be any onboard food available. And they said that they will make sure that there's hand sanitizing stations available everywhere. I believe this is what some people have been waiting for. Their shareholders were definitely happy. Their shares rose by about 2.5%. But EasyJet, they are in a bit of trouble. You mentioned that cyber attack, which has been accused. They've accused China for doing it. They lost 9 million passengers worth of details, as well as 2,500 credit card details. Also, they've borrowed some money from the government to the tune of £600 million, and they're furloughing thousands of their staff. They've also got a spat between the owner and their chief executive officer. So EasyJet have a lot going on, but they do believe that they need to start getting some passengers out and about and take their airlines en route. And I suppose some airlines may follow. But yeah, so if you're keen to travel, just a couple of weeks' time, you may be able to go to the south of France.
All right, Juliana, let's see if that will happen. Thank you, and we'll see you again tomorrow.
Thank you.
And in Europe, stocks declined this morning as Eurozone Purchasing Managers Index data indicated another slowdown in activity for the region's manufacturing and services industry in May. Let's talk to Chelsea Delany at the Frankfurt Stock Exchange for more. Good afternoon, Chelsea. A new report shows economic activity in the Eurozone was stronger than expected in May. Has the economic damage from coronavirus reached the bottom?
All of the data that we're getting is signaling that we've at least reached the bottom. So economists expect the declines we saw in April to really be the worst of it, but that by no means indicates that we're anywhere close to normal. So today's data, for example, it showed a pretty broad slowdown in both the services and the manufacturing side of the economy throughout Europe. And it wasn't as steep as April, but it's still its activity is extremely depressed in both sides of the economy right now. So I think this really just underscores how long it's going to take for economies to recover. This did also break out a few countries. So we got data also for Germany and France, both indicating broad-based slowdowns. But Germany does seem to be faring a little bit better than France at this point because it started to lift its restrictions earlier. France is really facing a profound collapse in activity, but this is going to take a long time to recover from. I think a lot of investors had hoped that the economy would bounce back quite quickly as these restrictions were loosened, but this data today really signifies that it's going to take a long time for both the manufacturing sector and the services sector, so retail, hotels, things like that, to really get back to where they were before the pandemic outbreak.
Well, German airline Lufthansa says it's close to finalizing a €9 billion rescue package with the German government. Do investors support the bailout?
Investors have mixed feelings about this. It is obviously extremely necessary. Lufthansa has been facing a really unprecedented decline in passengers and in all business activities. So it's grounded about 99% of its planes. It hasn't been flying really at all, and that means no money coming in. So they absolutely do need a bailout. but there is a lot of contention over what shape that bailout should take. So the government here is proposing that they'll buy a 20% stake in the company with the option to buy about 5% more, and that would mean that they would be able to block certain decisions. So if they see Lufthansa going in strategic directions they don't like, if they think that the company is giving too much money to its executives, they don't like their climate policies, the government would technically be able to step in and say, no, you need to change your direction here. So that sort of government intervention is really controversial. But for shareholders as well, this 25% stake would mean that they would see the value of their shares diluted. So there is a lot of complicated and contentious issues in this bailout, even as it is deemed quite necessary. But if it is going to happen, shareholders will have to approve it.
Germany is tightening regulations for its meat industry after coronavirus flare-ups in slaughterhouses. Could the country be heading for meat shortages like in the U.S.?
It seems unlikely at this point. What these new rules are going to do is make it more difficult. They're going to, for one, require a lot of slaughterhouses, a lot of meat processors to change the way they hire workers. So right now, a lot of slaughterhouses rely on foreign labor, and they subcontract the work to them. So the actual owner of the business wouldn't be legally liable for any problems in the factory. So they are going to change that, and they are going to introduce new safety rules. So the reason we've seen a lot of these outbreaks in slaughterhouses is because a lot of people work really close together, and there isn't as much space there. So a lot of people have to really be in close contact with others. And this has led to a big problem, and not just in Germany, but in the United States and really all over the world. But these restrictions will only come into play next year. So in the long term, this likely will raise prices, but there's no real immediate worry about a shortage of meat.
Thank you, Chelsea. See you tomorrow. And stocks in Asia Pacific mostly declined today as investors continue to monitor the reopening of economies amid the coronavirus pandemic. Mainland Chinese stocks dipped, with the Shanghai Composites 0.55% lower, while the Shenzhen Components declined 0.94% to 10,845.4. Hong Kong's Hang Seng Index slipped 0.51% as at its final hour of trading. And on the flip side, South Korea's Kospi advanced 0.44%. to close at 1,998.31. In Japan, the Nikkei 225 closed 0.21% lower, while the Topix index finished its trading day 0.23% lower. Shares in Australia slipped at the close of the day, with the ASX 200 down 0.41%. And futures contracts tied to the major U.S. stock indexes fell in early morning trade as investors took a breather from Wall Street's robust gains so far this week. Dow Jones Industrial Average Futures fell 207 points, implying an opening loss of about 193 points. S&P 500 and Nasdaq 100 futures also pointed to weakness at today's open. The overnight moves came on the back of sharp rallies in the major stock indexes so far this week. The Nasdaq Composite and the S&P 500 both extended week-to-date gains during Wednesday's regular trading session and finished the day up 2% and 1.6% respectively. And oil prices rose in early trade to their highest since March as a drawdown of U.S. crude inventories and output cuts by major producers helped ease concerns about a supply glut. Brent crude futures for July delivery were traded up 1.7% at $36.37 a barrel, while U.S. WTI crude futures for July were up 1.8% at $34.10 a barrel. Both prices are at their highest since March the 11th. We'll turn our attention to the commodities market segments when we return in just a moment. Please stay with us. Welcome back. Morocco's consumer price inflation slowed to 0.9% year-on-year in April compared to 1.5% in March. According to the High Commission for Planning, food prices rose 2.7%, while non-food prices dropped 0.3%. On a month-on-month basis, the index rose 0.1%, while core inflation, which excludes prices of volatile goods, was 0.1% month-on-month and 0.9% year-on-year. And Rwanda plans to increase spending by 7.5% in the 2020 to 2021 fiscal year to 3.24 trillion francs. The country's finance minister says donors will fund 15.2% of the budget, with the rest coming from revenue and debt. Although the minister did not give further details, he says the government will borrow 783.4 billion francs from abroad. Now let's talk about the iron and steel industry, which is said to be the backbone of any nation as it serves as stimulus to national development and economic boost to industrial growth of a country. Here in Nigeria, the federal government recently inaugurated the Ajaokuta Presidential Project and Implementation Team to revamp and resuscitate the steel plant. The steel company, which was incorporated in 1979, has since been unproductive for the past 40 years. Let's bring in Dumebi Iyeke, a research analyst at the Financial Derivatives Company, to talk more about this and Nigeria's iron and steel industry. Good afternoon, Dumebi. Thanks for coming on the program.
Thank you so much for having me.
So tell us, what's your view on the decision by the government to inaugurate a team to revive the Ajaokuta steel plant, and is it even sustainable in the short to medium term?
In my honest opinion, I really think that this is a much-awaited move because, like you rightly said, activating or revamping this steel plant is one of the major cores to boosting the industrialization process in any country. And right now, with the government doing this, it simply means that there is hope, like they'll say, in view for the industrialization in Nigeria. I mean, if this steel plant is boosted, if it comes to life, with the expectation that a lot of people are having, we'll definitely see the ripple effect in the iron and steel industry. And this is not only going to happen in the iron and steel industry, we'll see the same effect in the construction sector, because iron and steel is a backbone to industrialization, like you rightly said. We'll see railways, we'll see airports, we'll see, and even down to cutleries. I mean, so every iron and steel related company every iron and steel related company is going to definitely benefit from this. So in my opinion, this is a strategic move. I mean, it's coming at the right time, so to say, being that right now the move to diversify the economy is really strong, being that oil prices have, been very volatile, and we need to move from that point of being a monodependent economy to a diversified economy. And industrialization is one of those very many processes or places where the government can get revenue and also boost economic activities in the country. Is it sustainable? If this is dependent on whether the project is well managed, and if it actually, if the steel plant is performing at its maximum capacity to, have the ripple effect in other steel-related industries. So yes, it could be.
Looking at the numbers now, the basic metal, iron and steel industry under the manufacturing sector grew by 1.2% in Q4 2019, and that was from 5.06% in the third quarter of 2019. How will this new development actually affect the growth of the iron and steel industry in Nigeria?
Like I rightly said, there would be a ripple effect if and this is all dependent on whether the steel plant, performs at its maximum. And let's remember that this steel plant has been in place since 1979, so there would definitely need some. It would definitely need some modernization. It would definitely need to be upgraded, and right now it's not a matter of it just only being upgraded. It has to perform at a maximum capacity. The steel that we're going to get from the plant needs to be competitive, and definitely would. It's all dependent on, how this steel plant functions and, the ripple effect in the iron and steel industry. So if it all goes well with the steel plant, we could see an increase in the performance of the iron and steel industries, and all steel-related companies would definitely benefit from this.
And with all this now, do you actually see a rapid recovery in commercial and economic activities in producing states like Kogi, for instance?
You know, it's not going to be like a quick thing. You know, it's not going to be a quick fix, but the expectation is if this goes well and if iron and steel related industries are, you know, boosting. I mean, Kogi is one of the biggest iron ore producing states in Nigeria. I mean, currently Nigeria has over 2 billion iron ore deposits in the country. So if the sector actually improves, we could definitely see an increase in commercial and economic activities in Kogi State. And this is just normal economic processes that take place within a particular state or area. Once economic activities begin to boost in that particular area, investors are attracted to it, both domestic and foreign. So we'll definitely see an increase in the activities in the state. And, you know, people, just like we have a lot of people coming into Lagos, we could see people, you know, migrating to Kogi State, you know, for opportunities, you know. So we could definitely see that. I mean, it's not going to happen so quickly, but in the short to medium term, this is about 5 to 10 years, we could see that happen.
Now, the global market for crude steel is estimated to contract by approximately 12% in 2020, and production and consumption of steel are expected to shrink by 6.2% and 5.3% respectively. Now, with these dynamics, do you actually think that Nigeria can successfully participate in the global market for steel?
I mean, right now, I mean, it's no news that the COVID-19 pandemic has really affected almost all domestic and global commodities markets. So steel right now is not excluded from this market dynamics, but it's expected that the market for steel could resuscitate in Q3 and Q4 of 2020 and in 2021. So Nigeria could actually successfully participate. And the major reason for this is because right now, we're not just only looking at now. I mean, we're looking at a period of 5 to 10 years from now. So the expectation is that the steel plant would actually perform at its optimum and not only service local production, but also service export. So we could see Nigeria successfully participate in the market for it.
Dumebi Yeke, research analyst at the Financial Derivatives Company. Thanks for coming on the program.
Thank you so much, BC.
Return now to Egypt, which will deduct 1% from people's salaries for 12 months, beginning on July the 1st, to offset the economic repercussions of the coronavirus. According to a draft law approved by the cabinet, the tax will be imposed across all sectors of the economy in both the public and the private sectors for net monthly salaries exceeding 2,000 Egyptian pounds, while a tax of 0.5% will be deducted from state pensions. The measure comes as Egypt tries to deal with the economic impact of the COVID-19 pandemic, which has brought tourism to a standstill and threatened remittances from Egyptians working overseas. Revenues from the salary tax will be used to support organizations and workers hit by the fallout from the virus, as well as for direct support to some citizens and funding for the medical sector. And that's our program today. Thank you for watching. I am Bisi Adebayo.